This is the CMC Connect Volatility Report. Netflix stock leapt higher on Thursday morning after supportive comments from the company heralded the success of the advertising-supported subscription models. Trading lower monthly fees for a degree of commercial content appears to be paying dividends for the company, with user numbers in this category growing 50% between November and December. Whilst opening gains weren't sustained, the stock still ended almost 3% higher, with one-day vol of 72.92% against 40.06% for the month. The Nikkei 225 continued to move higher on Thursday too, and although the pace of gains may have slowed from earlier in the week, a couple of spikes higher at either end of the day do seem to have served to bolster price activity. One-day vol on the index printed 24.18% against 14.75% for the month, but with gains of more than 6% since the start of the year for the underlying, the sustainability of the move may be called into question. That slightly hotter than expected US inflation data released yesterday also served as a stark reminder that the hawks at the Federal Reserve were still defending a meaningful case. The result was some fairly dramatic support for the US dollar, although this didn't necessarily last long. Aussie dollar had been trading close to highs for the week, dipped around 0.8 cents lower off the back of the data before seeing almost a complete reversion. One-day vol on the pair printed 11.93% against 10% on the month, and natural gas was offered another leg higher after the inventory data posted bigger than expected draws of US reserves. Having sold off around 15% from highs earlier in the week, the news of falling stocks resulted in a close on 10% gain before some modest profit taking was again observed. One-day vol on nat gas stood at 92.1% against 68.7% for the month.